Today we're going to look at the general journal and go through the transaction analysis and put entries into the general journal. So you will need to turn to page 98 in your textbook, and we are going to start doing the demonstration problem together. In the back, in your study guide section of your textbook, you will need page number 59. So go and get those materials right now. So looking at the general journal, you will notice that there is a date column, account title and description column. PR stands for post reference. Then we have a debit column and a credit column. So we are going to put each transaction into this general journal. So demonstration problem on page 98. Journalizing transactions, posting, and preparing a trial balance. In this video, we're just going to look at the general journal. So starting with March 1st, Abby Todd invested $5,000 cash in the new employment agency. So step 1, determine what accounts are affected. Underneath the entries, you will notice in the textbook, there is a chart of accounts. So one of the accounts affected is cash. The other one is Abby Todd Capital. So I'm going to come over to my general journal. This is the first entry on the page, so I'm going to put in the year. The date is March 1st, and I always list the debit account first. So cash is going to be debited for $5,000. And I put in all the circles, all the zeros, so that I know I did not leave anything out. Then I'm going to indent a ½ inch and put in A. Todd Capital. All credits are indented in. Credit $5,000, putting in all the zeros. The third line is an explanation of the transaction. So I indent again and put owner's investment. Skip a line and go to the second transaction. So back to the directions in the book. On March 4th, bought equipment for cash. So determining what accounts are affected would be cash and equipment. Now, what account categories do they belong to? It is equipment is an asset, cash is an asset. So what will they increase or decrease? Well, equipment's going to increase because we're going to have more equipment, but cash is going to decrease because we're going to write a check and then lower our amount of cash in our checking account. So I go back to the general journal. It is the 4th. Equipment is debited, so I'm going to list it first. We always list the debit amount first. Then I'm going to indent in and put cash credited for $200. Explanation, bought equipment for cash. All right, so let's review on the transactions we've just done. Looking at your general journal, you put the year at the top only once for each page. Then you'll notice that March was only written once so far. We do not write the month again until it changes to the next month, which is April. So all we do is write the days. The first line of a journal entry is always the account that is debited. The second line is indented in, and it is the account that is credited. The third line is the explanation. Then we skip a line and go to the next transaction. So let's go and do the next transaction on March 5th. So I come over here, skip a line, put the 5th. Earned employment fee commission, $200, but payment from Blue Company will not be received until June. What that means is that we will receive the money in the future. So, step 1, what accounts are affected? Well, we have employment fees earned as our revenue account, and we will receive money in the future, so it's accounts receivable. Step 2, what categories are these accounts in? Well, employment fees earned is revenue, and accounts receivable is an asset. Will they be increased or decreased? Employment fees earned is going to be increased, and accounts receivable will be increased. So then, accounts receivable will be listed first, because to increase an asset, you debit that account. So accounts receivable, $200. Employment fees earned will be credited. $200. Explanation, revenue on account. Now these explanations just have to be short. They are not a complete sentence, but enough information to tell us what happened in the transaction. So I want you to go through the rest of the demonstration exercise transactions, put them in the general journal. This way you will have a better idea of how to do the problems in the homework and also on the written test. Now let's look at the completed general journal after the last transaction in March. This is what your general journal should look like. So on the 6th, you will see wages expense debited, cash credited. On the 7th, you should have ATOD withdrawals debited, cash credited for $75. Now it's very easy in a general journal to make sure that your debits equal your credits for each transaction. On the 9th, you have cash and that debited, employment fees earned, credited. 15th, supplies, debited $200, cash credited for $200. So you continue all the way down through the general journal.